Good morning from Chicago traders. It is 8:02 a.m. on Thursday, the 6th of May, 2021. This is episode number 1988. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So, as we do every day, we're going to dive right into the Convergent Trading pre-market summary sheet. There it is. Overall, the market is in a neutral posture, seeing back and forth in the overnight session. The S&P is currently only up 0.75 points or 3 ticks, trading at 41.60.75. Silver takes the lead today, up 39.5 cents, trading at 26.91.5. Followed by the euro and gold. Gold up $8, almost at 1,800 again, 1792.50, up 0.45%. Crude is the weakest of the bunch, trading at 65.37, down 26 cents or 0.4%. The Nasdaq's off 16.75 points. So mostly unchanged to just not going anywhere, is the current market status. So that's where we stand this morning. Again, neutral posture, with silver taking the lead, and crude oil being the weakest. Bitcoin and Ether, the last I looked, it was flat to downish. I think earlier it was down $27 or something. Ether busted right through that 3,000 level and pushed to the mid-century at 3,500 pretty quickly. Bitcoin lingering below the 60,000, the $60,000 mark, with others breaking out. Dogecoin, I think, hit 60 or 65 cents, which is insane. It was a penny just about a month and a half ago. So the S&Ps currently have traded 214,000 contracts, which is pretty active for this time of day. 214,000 contracts with 23 points of range, completely balanced profile, and the overnight inventory is about 65% long. 65% long. So that's where that stands. Several things on the calendar for today. And in terms of earnings, well, why does it do this? There we go. Terms of earnings. Pre-market, we had a couple, nothing really gigantic. Really, what's remaining? The big one that's remaining is AIG. AIG is still ahead of us. AIG estimated revenue 10.98 billion and 97 cents. It comes in after market. And McKesson MCK 61 billion in estimated revenue, $5.04. So that's where that is. Other than that, the calendar is relatively straightforward. We had the BOE interest rate decision this morning. They're holding steady. Their QE program holding steady at $875 billion. Jobless claims came in line, basically 560,000 versus 500. Well, initial claims 498 came in a lot better than the 545. These numbers are moving back to what was normal once upon a time. And the 4-week average is 560 versus 562 expected. And then for what's remaining for today, as you see there, Williams, Bostic, Mester, Kaplan. So it's a Fed parade day. Just make sure your news feed is running and pay attention to what they're saying about their positions, although they're not equally important. And then this evening, China's Caixin Services PMI for April comes out, expecting 54.5. Exports and imports come out at 10 p.m. 9:45 Eastern and 11 p.m. Eastern. Balance of trade also at 11 p.m. Eastern out of China, expecting plus 14.5 billion. Let's hop into what was expected yesterday. So, given the way we closed, Tuesday, with us basically making a V bottom yet again, the expectation is a likely, and having drifted with a gap open higher, the expectation is we are likely to pull back to the prior day's high of 4170 and then start taking off, continuing back to 4200. That's the primary scenario. The secondary scenario is push to 4180, get tangled at 4180, roll over. If not, then 85, but 4180 expected, 4181. Remember, that's the big balance point in this region. Very important price to remember. There's some key prices to remember. 4181, we went through these yesterday. 4181. 4151, 4123, 4067, 4038, and 4014. Those are your big numbers. And of course, the all time high of 4211. Those are the big pieces, milestones on the map. So yesterday's plan is push into 4081. Have an impulse down, consolidate around the overnight point of control, and break down into a test of 51. That's scenario 2. You can see it right in front of you. Of course, you can always go back and review these trader bites and listen to the logic behind the narrative that supports that idea. Here's what actually took place yesterday. Let's turn off some of these lines. We open up, we're immediately responsive into the prior day's range. So we've closed the gap, pull back to 74 half, and then continue down to 53. We push to 53. Remember, 51 is the anticipated support. And then it turns around and goes to 80 versus 81. So we had scenario 1 done backwards. We expected a push to 51, got 53. Very clear area down here, got 53. It looks like it was front ran a little bit, but we had our impulses expected, pullback continuation, nice little 10-point rotation here, and then it turns around and goes to 4180 to close the naked point of control from several days ago and back into this high volume node area in the 80-81. Very methodical. The profile looks like a double distribution, but I wouldn't really truly call it that. The profile is somewhat contested. The price discovery is somewhat contested both ways yesterday, and the market is still in this. I don't know what to call it. It's kind of in a rounded top. Battly kind of zone here. We're really not doing a good job facilitating to the buy side, as good a job. I talked about this quite a bit this week on the composite. We're not doing such a good job facilitating to the buy side, but we're also not seeing motivated sellers coming in and really taking us down. We did a couple days ago, but we took that selling right back. And so there's this détente, this kind of standing back and waiting for what could take place. This is normally the sign of a trend change, right? You have a trend that does one of these, and then what happens is it starts to do one of these. It starts to fight both ways before it finally releases to the other side or before it consolidates enough to have the next leg up. We're kind of in this mess here. So it's really pushing both ways. You can find, let's put it this way. You can find a great argument for a long if you're a higher time frame trader. You can find a great argument for a long, and you can find a great argument for a short as well. Long-ish has more of an edge slightly, but you can certainly find a great argument for a short as well. And that's where the market is. That's what the narrative is saying, and that's what these bars are saying. Delta negative again, selling off. 39,000 negative is actually almost a trend day delta. I mean, we trended down the other day and we were in this area. This is pretty strong selling delta on a relative basis. But as you can see, price is still hanging in there. Coming into today's session, we finished near in the lower distribution yesterday, continued lower, and then we went up to the low volume node, which also represents yesterday's mid, and then we test down, walk back up. European markets open, we have a quick splash up, and then we come down again. So what the overnight session has done is it has tested both distributions. It opened in the lower distribution, tested the low volume node, pulled back, built a base, ran to the point of control of the upper distribution of the day, and then came right back to the lower distribution's high volume node. Very, very noisy kind of trade. 217,000 contracts traded so far. And so I'm expecting today to bring in a little bit of volatility. Why? Because we see the overnight activity is pretty strong. We have a double distribution profile. There's still a good argument for both sides to interact. So I'm looking for testing in both directions. Here we almost got to we almost got to that 41.81 from yesterday. We have a tiny teensy little gap that we left behind of a couple ticks. I removed the gap zone, but yesterday we opened up in the gap and we fell right back into the body of Tuesday's candle, and we ended up closing there. And so we are still below this 80 area, and the 80 area continues to be an important reference point. 80 to 50 to 23 to 67. These are all the key balance zones, again, that I rattled off to you just at the beginning. And here we sit and we're balancing in this high volume node that we formed so far this week. So as soon as we take out yesterday's low, expect a relatively quick run into 51 and 40. So this low volume node here is built right on top of the 51.50 area. As soon as we give that up, we expect quick acceleration down to 40, and then the market to pause for a minute, decide what it wants to do, and then potentially test the rest of this wick here, this excess low that we see on the daily, before we decide what to do next. So my point being, we're really in an interesting position here. We're in a precarious situation where I'm pretty sure the longs have their fingers on the flatten button or the sell button, and the shorts have their finger on the cover button, because it can turn in either direction. So if we put a profile on what is going on in this area to see what the overall picture is, you could see that it's really tapered out at the top. We've tapered out at the top pretty well. We've traded the bejesus out of this middle part, and we have this blunt part down below us. And what I'm saying is, if we clear this low volume node down here, we're likely to continue to trade through the blunt part and set us off on a pretty good trend down again to 67, 38, and 14. Those become targets. Okay, so that's where we stand. Fresh new lows on the delta down here. Why am I not able to draw, people? Fresh new deltas down here, something to pay attention to. In terms of the order flow this morning and what we've got, really relatively quiet. We have a large block at 53.75 likely to trade out, but looking on top and beneath, not very much that's descriptive here. We do have some larger sizes resting in the book, like 41.75 has had a lot of size there trade for the last 2 weeks or so, but you can see that it's really made up of these choppy this choppy block. And then if you look below, the only thing that stands out with size is this 53.75 near yesterday's low. And then we have the overnight low at 51.50. So once this gets taken out, we're likely to see the market hitting the bid and pushing for that overnight low. Okay, so let's move on to what's expected for today. Just setting up the chart. Give me a second. While I'm doing that, I want to remind everyone that I'm going to be on Futures IO today from 3:30 Central to 4:30 or 4:30 Eastern to 5:30 with Maxwell Timmons from Edge Clear. We're going to be talking about Edge Pro X, the platform you were just looking at, discussing the features and so on. To join, it's ft71.com/lowercase FIO May 2021. You'll find this link in the description. It's also on my Twitter feed. Please register if you want to attend. We're just going to go over the platform, why I've gone and decided to take on this task of building a platform and why it's really designed for traders. So have a look. Join us in the discussion. Of course, ask questions. You don't have to be an elite member. You just need to register once on Futures IO if you don't have a profile, and then you can always use that profile to register for other talks or webinars. So we are just on top of the overnight point of control, just below the full session mid and VWAP. We're sandwiched right in here. So we're opening in the lower distribution of yesterday, expecting an open auction on the open. I'm expecting it to revert back up. Remember, the overnight inventory is about 67% long. Expecting it to push back up, failed to do so in the 67 area, and then an impulse down, and I'm looking for it to gun for this 51, consolidate it to 51, and then start to move towards, again, that area in the 45, 43 area, and then look for a bounce into the close. This is what I'm looking for today. Again, the numbers to look for: 51, 44, 43. Not expecting it to take out Tuesday's low, but we'll see. And then on the top side, 67, 75. Remember, there's size at the 75, and then ultimately 81. If it takes out the 81, the shorts are likely to be toast. No, it's not only for members. You have to use my link. I do not talk anywhere that requires you to pay or to to pay to attend. I don't participate in anything that requires traders to pay to attend. If you follow the link I provide, you should be able to register without having elite membership. The secondary scenario, open auction that tests down, pulls us back through this low that we just put in at 57, consolidate against the 53 from yesterday, push back up, and then start to squeeze to 75, looking for the overnight high to be taken out with a retest of 81, potential take of 81, and then resting into the close. Don't forget that tomorrow we have non-farm payrolls, right? We have the unemployment figures and non-farm payrolls, very important release tomorrow at 8:30 a.m. Eastern. So the market's likely to position itself for that before the end of the day. So those are the two key scenarios. Look for a test of 67, drop to 51 and 43, or consolidate to take out the 57 low, the intermediate low overnight, to run up to 75 and 81. Okay, don't forget to register for today's webinar. It is at 4:30 Eastern after the close, 15 minutes after the pit close. The pits are going away, by the way. The CME is closing the pits and replacing them with a museum. But please register ft71.com/FIO May 2021. You shouldn't have to pay or become an elite member to subscribe. You do have to become a member, so you have to register, but you don't have to pay to attend. Good luck.